Hey guys, Greg Silverman here for another session of Come Learn With Me, part of the compendium of CIOs and bow ties, coming to you from the Starship Enterprise. There's Klingons on the starboard bow, Jim. Shake them off, Jim. Okay. Another article that got some likes. 7 lithium and battery stocks for big growth. Needless to say, we don't recommend any stocks here. I'm just reading what is popular, so do your own due diligence. EV companies, again, rely on battery technology, making these battery stocks long-term buys. Seems like folks out there are really enjoying the EV theme, the SPAC theme, and of course now batteries. And we've got some mini groups around there. We've been following battery stocks for a long time, and so it's interesting for us to see they joining mainstream. Okay, let's jump in. Let's firstly highlight. As you know, we highlight all the pertinent points, so you don't have to listen to me, you don't have to read the article, just read the points. Okay. 2020 became the year of electric vehicles on Wall Street. Investors looking for the next Tesla readily invested in businesses that had a clean energy niche. As a result, the risk appetite in battery shares also increased significantly, pushing these stocks to record highs in recent weeks. Today's article introduces 7 lithium and battery stocks that could be poised for further growth in the coming quarters. According to recent research conducted by members of the Argonne National Laboratory in Lamont, Illinois, the currently commercialized lithium-ion batteries have allowed for the creation of practical electric vehicles, simultaneously satisfying many stringent milestones in energy density, lifetime, safety, power, and cost requirements of the electric vehicle economy. Statista editor Willem Roper highlights new data shows how the demand for lithium-ion batteries has crept up over the decade and will skyrocket as we enter the next. The new President Joe Biden administration is expected to support more clean energy initiatives. Thus, the future looks bright for the EV sector. Battery stocks could also reach a new all-time high this year. Let's just double check when this was published. February 4th, 2021. However, the current risk appetite makes such battery stocks volatile, especially in the short run. You should be ready to embrace swings in price, possibly with a downward during the ongoing earnings season. With that information, here are 7 lithium and battery stocks that could energize portfolios. Albemarle, Amplify, Global X, Lithium American, Livent, Plug Power, Switchback Energy Acquisition. Okay, let's go into battery stocks. Albemarle, ALB, North Carolina. Headquartered Albemarle has been on investors' watch list in recent months. It's been on our watch list for a while. It is the industry leader in lithium, which is used to make electric vehicle batteries. The group also produces specialty chemicals used in products manufactured by pharmaceutical firms, agricultural companies, water treatment businesses, electronic products manufacturers, and refineries. As a result of the street's love for any company that is EV-related, ALB stock's price nearly doubled in the past 12 months. Now Wall Street is betting that the new President Joe Biden administration will take environmentally friendly steps that could provide further tailwinds for shares like ALB. According to the most recent quarterly results, net sales were $747 million, down by 15% year on year. Net income came in at $98.3 million, a decline of 36.6%. Adjusted diluted EPS of $1.09 was down 28.8% year on year. This looks like a commodity play, which typically is quite volatile. Management noted our long-term strategy and capital allocation priorities remain the same: to invest in lithium growth using cash flows from our entire enterprise, while maintaining our dividend and investment grade rating. ALB stock's forward price earnings ratio and price sales ratio of 38 times and 5.35 times. Wow, that's steep for price sales, respectively. As a result of the recent run-up in price, the valuation metrics are on the froth side. Yeah, potential investors should consider investing when it's under $160. Just a reminder, we don't make recommendations. I'm just following an article your way. Amplify Lithium and Battery Technology, BAT. Our next discussion centers around an exchange-traded fund, namely the Amplify Lithium and Battery Technology ETF. The fund's focus is users or manufacturers of lithium battery technologies. Such businesses might provide battery metals or storage solutions. EVs that rely on lithium batteries are also among the holdings. BAT, which tracks the EQM Lithium and Battery Technology Index, holds 72 stocks as far as sectors are concerned. Materials, nearly 50%, automobiles and components, 20%, capital goods, 14%, with 5 leads list. Over 40% of its net assets of 78 million are in the 10 names. EV darling, Tesla, China-based battery systems business, Contemporary, Amperex Technology, EFE Group, BYD, and leading global resources named BHP and LG Chemical, the largest South Korean chemical company, make up the top names in the roster. 2021 started on a solid footing for investors in BAT. In late January, it hit a record high and is up about 12% since the start of the year. Potential investors could consider buying into the decline. This one's one of the more popular ones, I think. Global X Lithium and Battery Tech ETF, LIT. Our next choice today is an ETF, is also an ETF, the Global X Lithium and Battery Tech ETF, which gives exposure to firms that focus on lithium worldwide. They amount range from mining and refining lithium to manufacturing lithium batteries. LIT, which tracks the Selective Global Lithium Index, has 40 holdings. This fund's net assets stand close to 2.9 billion, so fairly sizable compared to the previous ETF. From a geographic standpoint, China-based companies top the list with 44%, followed by US 22%, Korea 12%, and Japan 6.7%. Big names, Albemarle, which we discussed above, Ganfeng Lithium, LG Chemical, Tesla, and Samsung comprise close to 35% of the fund. Since the start of 2021, the fund is up over 9% and hit a record high in early January. Given the recent choppiness in broader markets, some investors might decide to take money off the table, but the long-term prospects for the industry are solid. Lithium American, hopefully this is a company. Canada-based resource group Lithium American is a development stage company with projects in Argentina and Nevada. It mainly operates on 2 projects, including the Cauchari Olaroz lithium project in Argentina and the Thacker Pass lithium project in Nevada, with Lithium America owns 100%. Reuters has recently reported Lithium America has said it plans to spend $400 million on the first phase of its Thacker Pass project with output of 20,000 metric tons of lithium annually. The mine is expected to open by 2023. Following the governmental approval, investors are hopeful Lithium Americas will be able to find a partner for the project. Shares in the lithium miner have benefited immensely from the surge in lithium demand in the past several months. In mid-November, Lithium Americas announced Q3 results, a loss of $6.5 million, translates into a 7 cents per share loss. Cash and equivalents was $71.9 million. The company is not producing lithium at scale today, therefore the current price might reflect optimism around EV industry trends. See my previous article on SPACs in EV space. Put another way, the future growth story of the share depends on the company producing its own lithium. As a result, the LAC stock is likely to be volatile. I believe the potential decline towards $15 will improve the risk-return profile. Livent, LTHM. Philadelphia-based Livent is a lithium technology company that supplies products for a range of industries. It was spun off from Agricultural Sciences Group FMC and started trading October 2018. Livent has manufacturing sites in the US, UK, India, China, and Argentina. According to the most recent financials, revenue was $72.6 million, a year-on-year decline of 25.6%. GAAP net loss came in at $11.8 million. A year ago, income had been $18 million. GAAP net loss diluted per share was 8 cents. Cash and equivalents stood at 14.8, million, down by 36.5%. CEO Paul Graves underscored the importance of the group's supply agreement with Tesla. He said, we continue to see evidence that demand for lithium compounds will accelerate in 2021 and beyond, with growing support for electrification from OEMs, governments, and consumers, despite significant disruptions in 2020. Our ongoing partnership with Tesla and our agreement to invest in new Nemaska are examples of this. Stock's forward PE and price to sales ratio are 90.9 and 9.3, also rich, meaning a frothy valuation. Given how far LTHM stock has gone up in recent months, short-term weakness could be around the corner, especially during this volatile earnings season. Potential investors may find a better entry point around 15 or below. Plug Power. Okay, this one should be interesting. A liquid hydrogen Plug Power started operation in 1997, but 2020 became the year investors fell in love with Plug shares. The group specializes in hydrogen fuel cells, something we've been hearing a lot about for about a year now, regarded as a viable alternative to lead-acid batteries. Plug Power's products provides fuel for small warehouse forklifts and large delivery vans and airport safety equipment vehicles. In recent days, management said it would have a joint venture with France or France-based automaker Renault, establishing in France state-of-the-art innovation and manufacturing capabilities for hydrogen fuel cell systems and their integration in vehicles. Q3 results in November showed gross billings of 125 million, an increase of 106% year-on-year and 73.4% sequentially. The number marked the highest quarter in the company's 22-year history. The Street was also pleased to see an increase in the number of fuel cell units deployed, 4,100 fuel cell systems and 13 hydrogen fueling stations. Plug Power increased the 2020 gross billing guidance to 325 million to 330 million from 310 million. In the long run, we like to see Plug stock continue to hit new record highs. However, there is likely to be volatility with a downward bias in the shares soon. Potential investors should consider buying around 60 or even below. There you go, hydrogen fuel cells. That's one to do some research on. Switchback Energy Acquisition. On September 24th, 2020, Switchback Energy Acquisition, a publicly traded and special purpose acquisition company, and SPAC and ChargePoint, a privately held EV charging business at the time, said they would be merging since the SPE stock had turbocharged investor portfolios. In late September, SPE stock was around $12. Now the shares are over 40. Put another way, $1,000 invested would be $3,000 today. As investorplace.com, contributor Faizan Farouk says ChargePoint operates the largest EV charging station network in the world. He writes, ChargePoint projects compounded annual growth rates of 60% over the next 7 years, exceeding $2 billion in revenue by 2027. Potential investors could regard any dip in price as a good opportunity to buy into SP shares. So on the day of publication, Tekzan Yakil, I guess he's the author, did not have any, he's directly entering any position in securities mentioned. Okay, he's been investment manager for over 2 decades in the US and UK, in addition to a former high-end leader, the chartered market technician. I beg your pardon, her occasion is for options trading. Well, there you have it, folks. Let's just get a few points in here. I don't really see anything magnificent, but certainly want to get all of these in so that y'all can refer to it. And I just wanted to add the bit about hydrogen fuel cells. I think that's kind of important. Liquid and hydrogen provider Plug Power. And then also what I thought was kind of interesting was Switchback and the SPAC situation. So let's get that in. Well, there you have it. There's the ecosystem around electric vehicles and some of the stocks to consider. Again, not a recommendation. You do your own research. I hope you learned something. Thanks for joining me, guys. You all take care. Greg Silberman, out.